Welcome to Building the Premier Accounting Firm. This podcast is dedicated to having the successful accounting, bookkeeping, and tax business that you've always desired. I'm Roger Knecht, president of Universal Accounting Center, and I'm going to be your host. Today, we're focusing on what things you can do to help you have the confidence and competence to offer quality accounting services to get paid what you're worth. This is sponsored by Universal Accounting Center, an accounting school dedicated to helping accounting professionals improve their skills and get the certifications, training, support, and coaching that they're needing to optimize their services such that they can become the premier accounting firm in their area. Since 1979, Universal Accounting Center has been committed to finding and using the appropriate classes, trainings, to actually give you the training you're needing to go out and offer quality services. Now, with Universal Accounting Center, I've been here 20 years, and in those 20 years, I've had the privilege of working with a number of accounting professionals in such a way as to help them actually apply these principles in their lives and really, truly start and build successful accounting businesses. And I'm looking forward to the opportunity to do the same with you as well. Today, we're going to be discussing the principle of M.A.P, focusing in on the third part of that acronym, which is the P, standing for production. And I invite you to get a pen and paper handy to actually take some time now to record some of the notes that you'll want to obviously make as we give you some tips and tricks as to how these principles apply in your business. Before we get started, we do want to thank our sponsor, Universal Accounting Center. As an accounting school, we're dedicated to actually giving the training, coaching that you're needing to literally have the premier accounting firm in your area. So I'd invite you to actually see what certification programs are available for your own training, the training of your staff, or most importantly, the things that you can do to get the support needed so you can be in business for yourself, but not by yourself. So with that in mind, let's go ahead and jump into this. I'd like to start, first of all, just with an introduction to the concept of M.A.P and what the acronym actually stands for. And then with that, give it the context that we're going to be addressing today of production. So first of all, M.A.P is a concept that I would invite you to learn a little bit more in some previous episodes that we've had. But in essence, it's essentially M standing for marketing, A, accounting, and P, production. Marketing representing the things that you're doing to go out and find and retain new clients offering accounting services. The A representing the accounting services that you offer and how your clients benefit from those and what it is that you're doing. And production being the workflow, the efficiency within your firm and how it is you're doing the work to be profitable at the services you're offering. So we're going to be spending time today actually looking at basically the practice management of your business or the workflow of your firm to see what it is that you could or should be doing to really become best at what you're doing. Now, to give context to this, I'd like to just kind of share some questions that I always bring up when I'm speaking with business owners as they're running their accounting firms to identify really which of these three areas needs attention and why it would bring us to the production side of this M.A.P acronym. The easiest way to do this is asking three questions. The first being, are you interested in getting more clients? Are you struggling to the point that you're not busy enough and you'd like to find more clients to bring in additional revenue? The other happens to be, are you happy with the services you're providing? Do you feel that the services that you're providing are concise enough? Are they the ones that you want to charge for? Are there more services that you feel you should be offering that would allow you to bring in additional revenue streams? Perhaps are you wanting to get into more consultative services or train your staff to bring in additional people to do maybe the bookkeeping, accounting? That's the accounting side. And then the last being production, the question is essentially, are you too busy? You don't need more clients. Are you very comfortable and competent with the services that you're providing, that you're loving what you're doing for your clients, but you're just too busy and you're spending too many nights, weekends, too many hours working that you're feeling like this is consuming your life and you haven't had a vacation in too long. So, or, it's been too long that you haven't had one. Well, if that's the case, then production is where we need to focus. We don't need more clients. We don't need to do any more work and offer more services. But what we do need to do is become more efficient at the work that we're doing. It really basically comes down to what can we do to continue to charge for the services that we're offering, not change the fees for the amounts that the clients are paying, but become more efficient in the time that we're doing the work so that we can continue to earn the same amount of money, but do the same amount of work or better quality work in less time, thus improving our profitability. It's all coming down to efficiency. So in production, what we want to look at are three main areas. The first is the onboarding experience. When you first take on a client, how efficient are you in that experience of onboarding the client, getting to know about them, getting everything that you need in order to do the accounting work on a month-to-month basis? How is that onboarding experience, both for you and the client? Now that you have the client onboarded and month after month you're doing the work, what things are you doing to streamline the process? What was taking you, say, 8 hours in month 4? Maybe we could look at some efficiencies, maybe some apps or something to improve that process. So now in month 6 or 9, it's taking us not 8 hours, but 7 hours. These things are efficiencies. What we're doing here is we're looking at what can we do to still charge the same amount of money at a flat rate, a fixed rate, something that we're doing that enables us to find opportunities to work more efficiently, therefore making more money per hour. Now, oftentimes with this efficiency in the workflow, it also reflects on the individuals doing the work. So if you're a solo entrepreneur and it's a single person operation, obviously it's what are you doing to be efficient? But if you've got a business where you have multiple accountants in the firm, you've got multiple people working with variety of clients, we want to look at what's the workflow that we're all using in the business to ensure that the quality of the work is the same across the board with all the clients, regardless of with whom they work. What are we doing to ensure that we're not overly dependent upon any key individual within the company, such that if they were to leave because of maternity or other employment, or heaven forbid something unfortunate happens, whatever the case may be, just merely going on vacation or being sick doesn't impact the workflow. Others are able to step in and take care of things that need to be done. An example being the client calls in and is asking where are things with this certain file or this certain process. Rather than being in the dark and having to say, well, so-and-so's out today, I don't know, someone else can step in, look in, see what's going on, and be able to at least answer that question. All of this is accomplished because of efficiencies in workflow and standardizing those. The other thing happens to be with client relations. Client relations is ultimately, now that the work is done and the financial reports are produced, meeting with the client, what is that experience like? What are they, as a client, getting from you? Is it merely the reports themselves? Are you just simply providing bookkeeping services where you're providing the financials? Or are you doing more than that and offering, as an accountant, accounting services where you're going to interpret that information and give them the information that they need in a way that they can now use it to make more informed business decisions? If you're doing that, you're improving your client relations. And is this a monthly meeting, a quarterly meeting? How often are you meeting with them so that you can give them the interpretation of the data in such a way that they can now use it informatively? That client relation is going to allow you two huge things. One, increase the lifetime value of the client, the duration in which you're going to have them as a client. The average in the industry is actually 7 years. Well, if you've got a client that's not 7 years, you want to ensure you're doing things to keep them for 7 years. If you've had them longer than 7 years, congratulations, what you're doing appears to be working. That's amazing. That should then be resulting in referrals and so forth. But the beauty of this is it also allows you, if you have the proper relationship with your clients, to then work into consultative services, going beyond just the accounting you're doing and offering now a new service that they're going to pay in addition to increasing the revenue that you're generating per client. So let's go back basically in this production model to have a discussion about this. When I meet with people, it's always amazing to me when I'm meeting with a business owner, how often they first start with the passion and enthusiasm for the work that they're doing. They just get sucked into and love the books. They love getting to know these businesses, working with the clients. They love at that same time doing the work. They just love the process of doing accounting. They enjoy balancing things out, finding the missing pennies, producing the reports. That's all fun and exciting, and they don't mind being in that mind state and doing all this. But what I want to stress here is that what we want to do is recognize that what you're doing could actually be done more efficiently, more effectively. And so when I speak to a business owner and they're saying, I've got all the referrals I need, I've got all the clients I want, I love the work that I do, but I'm noticing that I'm tired. I haven't gone on a vacation. I've been working too many late hours. I'm working my employees too much. They're working too many overtime hours. I haven't gone on a vacation in a while. Whatever the excuse is, what becomes very apparent at this point is we've got a back office issue. We've got workflow issues that we need to address. We've got efficiency issues that need to be addressed. And the first question that usually comes up is, well, if I change how I'm doing things, is it going to become easier? And will it result in me making less money? That's just kind of an inevitable question, and it's a good question. The first thing that we have to understand is in no way is changing the efficiency of what you're doing in the accounting firm meant to impact the earnings, what you're charging for your services. Let that sink in. When you do your job better, more efficiently, it doesn't mean you charge less. If you're still charging hourly for your services, you need to let that sink in. You're not doing this the best way you can. Now, I'm going to just be very clear here. What is the motivation that you have to take what you're doing that takes 10 hours and do it in 8 hours if you're charging hourly? What's the motivation? You're actually deterred from finding those solutions, finding a better way of doing this, working faster. Why? Because if you go from 10 hours to 8 hours, in essence, it costs you 2 hours of billable hours. That's a horrible way of looking at your workflow in the back office. You have to get to a pricing strategy that's either flat rate or menu pricing or value price. There are so many other better ways that you need to be pricing your services. And if this is a question that you need to have addressed, I invite you to look at some of the other things that we've recorded that are related to pricing and some other resources that Universal Accounting Center provides to help you more effectively determine your pricing strategy. But to get to the point again about the production is we want to have very clearly this understanding that your efficiencies should result in you not changing what you're billing your clients, but in the end, you're now earning more per hour because you're more effective at what you do. You're the professional. That efficiency that you're now doing the books of business in month 6 becomes less in month 9, becomes less in month 12, is because you're the expert that you are, the professional that you are. The fact that something once took 10 hours now takes you 8 hours and could be done in 7 hours is a testament to the fact that you've been taking advantage of trainings that have allowed you to tap into various plugins and apps and AI interfaces and resources that have allowed you to do your job more efficiently and effectively. It's because you've embraced the technologies that exist today to say, I am going to be a current professional, and I'm going to leverage these things to help me now be more efficient in what I do and still get paid what I'm worth. So with that in mind, that's usually the first question that comes up. Isn't what we're discussing here going to impact the monies? I can't make less money, so I'm scared about doing it better or more efficiently or faster. No. Let's first get that off the table. I invite you to do this better. Now, the second question then becomes, well, how do I achieve this? And what am I looking at? And that's where we're going to start, first of all, with the onboarding experience. I think that's your first impression that you have with your clients. It's something that also is a great assessment to make sure that, you know, if you've got a good onboarding experience, even though you've had a client for a number of months or years, you can still go back if the onboarding experience is a new process and just see, did I do it all with that client? Is there something I didn't do with Tom or Sally that I need to do because it's part of my onboarding process and I forgot it with them? So we want to come up with the onboarding process and truly look at what is this meant to be as an experience for you individually, for your firm? What is it that you're expecting out of the process? What are the deliverables or check boxes that you need to identify? But then I want you to look at it through the experience of the client. What are you asking of them? When they agree to the agreement, when they actually say, let's do this engagement, I'm going to pay you for your services, what really did you ask them to commit to in the coming weeks and months? Is it going to be a 1-hour meeting in a week from now that we're going to need to do for the onboarding to get some passwords and logins to a variety of things? Is it an hour-long meeting to become familiar with the revenue that they have, where the money's come from, what people are buying, so that you can make sure that the top-line revenue is clearly documented and that we're actually showing on the P&L correctly the various revenue streams as line items? Are you correctly associating the COGS to the revenue in such a way that it's easy to understand the P&L. You've got a lot of questions as you onboard these clients. As you look at expenses, this looks like a personal expense. Is this really something that should be charged to the business? You need to dive into the nitty-gritties of this. How are you as the owner getting paid? Are you getting a payroll? Are you W-2'd? Or are you purely taking it as owner withdrawals or dividends? What's happening in the business? These are first-time questions and hopefully one-time questions. You're not asking these every single month. But when you onboard a client, these discussions need to happen. And if it's a well-honed machine that you're adopting here as a client, then by all means, this is going to be a quick process. If it's, however, a business that is loosey-goosey as to their accounting, maybe it's never been done. Perhaps you're getting a shoebox of materials and you're going to have to create the chart of accounts and build the accounting process. You need to really understand from an onboarding point of view, what is this looking like? Now, there's 3 common scenarios, just to make this very, very simple. The first is the owner is doing the accounting themselves, maybe has a spouse doing it, perhaps they have an administrative person. The point being is it's someone doing the books that isn't an accountant. They are doing it just because they've stumbled into it. They're doing it because it made sense to the best of their understanding. They don't know what they're doing. And with that understanding on your part as to who it is that's doing the books is going to help you in this onboarding experience. Ask appropriate questions, because if you know that it's the owner, the spouse, the administrative or office manager, these people, not being accountants, may have done things from the get-go that aren't correct that you're going to have to fix, okay? The second is perhaps the books aren't done. We're talking about receipts. We're talking about paper trails. We're talking about bank statements. You're just starting from scratch here. And whether they've been in business for months or years is irrelevant. You've got to create a book of business. And that's something that you need to look at. And the third is it's actually been done by an accountant. It's perhaps somebody that was doing the books that's moving on, they've retired, they've taken another position, they've been fired. I don't know what it is, but an accountant has done this. And doing so, you're going to be taking over the books of business, and you need to really kind of put a delineation between the books up to this point were done by this individual, the books from this point on are going to be done by me. You need to really draw the line in the sand saying everything after this point I'm responsible for, I'm accountable for. Everything before this is suspect because I can't answer to it, okay? Now, this is very important because I have a horrible experience to share. I've got actually way too many of these, but we as Universal Accounting Center have a division of our company called Universal Business Builder, where we do business consulting, and we work with business owners. And as part of that process, we don't do any accounting services. And it's intentional that way for a number of reasons. But the long story short is I had a client, and when we started working with them, they had an in-house an accountant. They were a CPA, retired, that were coming in about 10 or more hours a week to do all the bookkeeping, recording the transactions and everything. Started working with the individual, and I asked for the financials after we had worked with them for about 2 months so that we could start jumping into their financials and getting into the nitty-gritties of the numbers. Very excited to do this. I've been told when I got them as a client that a CPA was doing the books and doing them on a weekly basis, working in the books. I was excited to see the numbers. Well, very quickly, that person had a family emergency. They had to start helping a family member that had health issues, and came in and said, I can't do the books, won't do the books, I'm done doing the books. And the business owner was frustrated. What am I going to do? And so we looked at the numbers as they were, and they didn't make any sense, okay? Here's a CPA preparing the books. The business owner that was looking at them regularly honestly didn't know what they were looking at, and I didn't have anyone there to explain them. So we hired now a second CPA. The business owner found someone on their own, a CPA, to do the books, and this CPA came in, and they actually had a bank and audit experience background. And the business owner hired them to pick up the books, was excited to have them pick it up. They picked up the books, looked at them, made absolutely no sense of them, and said, I'm going to need to clean these up, and it's going to take me a number of hours to do this. So now here's our second CPA in the set of books. And I'm like, great, well, get them cleaned up. Let's look at them, and we'll look at them in a month. So let's give them a month to clean this up. And then at the next month end, we'll look at the financials and see how things are. So I'm excited to see this. It takes longer. The first month ends. We don't have financials to look up. Too much cleanup is supposedly needing to be done. I'm like, great, that's fine. Before the second month comes, as I recall, what happened is the CPA came back and said, I retired and this isn't what I want to be doing, so I'm going to quit. This is a little bit much, and produced for the business owner a lengthy list of here's all the things that need to be done that I haven't completed yet, but here's everything that needs to be done to clean up your books. And first of all, I'm looking at this list going, why are the books so messed up, having had this other CPA prior doing the books and now this person doing the books? Cannot believe the list that I'm looking at. I'm like, this is amazing. So all of a sudden now, I have this business owner that's in a state of distress. What do I do? I've got to make payroll and so forth. So he's going to step in and take care of the books, take care of payables and payroll and such. In the meantime, he decides to go with the payroll service, get that taken care of. So that's not an issue. Hires a bookkeeper. Bookkeeper comes in, starts taking care of the books. The cleanup is a mess. This is after 2 CPAs have had access to the books. They come in and in the process, take over the books. I finally get the financials. They're a mess. The bookkeeper has taken it upon themselves to not speak with the business owner and just start recording transactions and putting them wherever they see fit. And there's no rhyme or reason, no story being told in the financials. When I reach out to the bookkeeper to say, could you help us understand, why you recorded these transactions this way and so forth, the conversation becomes, this isn't what I'm paid to do. I'm just supposed to record the transactions. There's problems with the bank statements. I don't know where the money's coming from. I don't know. And I'm like, well, why aren't you asking? I mean, you're doing the books. If the numbers aren't making sense, why aren't you asking the business owner for some understanding of what's going on rather than just recording them for the sake of, I've done my transaction, I've produced the financials, they're done. The balance sheet doesn't even balance, for heaven's sakes. This is the third person now. We're easily into the coaching client relationship, 6 months at this point. CPA 1 failed, CPA 2 failed, bookkeeper 1 failed. Now we're on to the second bookkeeper. This is my recommendation. Get in, and it's unfortunately at tax season. And at tax season, the bookkeeper takes them on because they're excited to have the new client, but doesn't have the time because of tax season to actually set up the books and have an onboarding process. So now they limp along and tax season ends and they're able to get in. Do you see how this whole onboarding experience is a literal experience that needs to be addressed? That all of these individuals should have had a better process to onboard, take care of, and do the books. This is a single business client of ours that is in the process of a year worked through basically 4 individuals, 2 of which are CPAs, and every one of the first three were a disaster. The 4th one was a frustration because he committed to taking on a bookkeeping client during tax season, didn't have the bandwidth to actually onboard them properly, and delayed taking on or getting the books done until middle of the year. And that was a frustration on over delivering or under delivering on what was promised. Failure after failure after failure. Are you this? Are you this type of person that's perhaps not very concise in your onboarding experience, both for internal purposes as well as the client experience? That is just one of too many examples where I've seen the accounting profession eagerly take on a client, but not have a way of actually starting the process. And again, it comes down to one of those 3 scenarios. Either you're taking the books on where the books have never been created and you're starting with chart of accounts. Somebody else is doing the books, but they're just a non-accountant, just trying their best to do what they can, or it's actually an accounting professional, but you've got to draw the line in the sand and say, from this point forward, the numbers are accurate and I can account for them. But before this, I don't know what the heck's going on, but I can at least tell you from this point forward what the books are. That is critical. So that brings us now in the back end with production to you've got the client, you're up and running, you understand the business, and you're now looking month after month after month at what's happening. And I beg the question of, is this a process that is duplicatable? Is it teachable? Is it transferable? If you were to hire someone to do the books, could you easily have them step in and go through a checklist? If not, is it someone else doing the books that if they were to disappear for whatever reason, you could step in and know where they were at and could pick up where it needs to be? Do you have a turnkey process to your business model? This is the same thing you would expect of your clients to have in their books or in their business regarding their products or services, a process, a system. And what is yours? Is it all in your head? Is it just, well, this is how I do things? Or is there a method to the madness? And so that's one of the things that I want to really stress here is really looking at in the coming year, what could you do to systematize your process and come up with a standard operating procedure, a practice management philosophy to your business? Is this something that allows you to be independent of a person, including yourself, and trusting in a process or a system that is deliberate? For that reason, there are a variety of things that you can do to follow very specific processes and procedures. I encourage you to contact Universal Accounting Center and see what recommendations we could have as to what you could be doing to systematize your workflow. Universal Accounting Center is sponsoring this session, and as a sponsor of this session, has a variety of ways to help you in the production side of your business to specifically recommend workflow procedures that are used in accounting firms around the world that are effective and efficient in helping you streamline your process. I encourage you as a sponsor of this podcast to contact Universal Accounting Center and see what you can do to work on your business and literally implement these strategies in your business so that you can find the time that you've always wanted for either freeing up your weekends, freeing up your weeknights, or perhaps taking that vacation you deserve. So contact Universal Accounting Center. The phone number is 801-265-3777, or visit us online at universalaccountingschool.com. Now, with that, let me just point out that there are a variety of things that you can do with regards to this. There are some great programs out there, two of which I'd mention is the Virtual Bookkeeper's Roadmap and also Pure Bookkeeping. These are just two that I'm familiar with that I would suggest asking about when you contact Universal Accounting Center. One of the things that I would definitely encourage is for you to just assess in your own business, what kind of growth plans are you expecting? Are you a solo entrepreneur that you're just looking at how you can streamline your workflow? Or are you looking at in your business with your multiple employees, accountants, bookkeepers, what you can do internally to actually manage better the workflow that's occurring in the firm? These are very appropriate questions that you need to be asking so that you can determine what best you can be doing to become more efficient and therefore more profitable. The secret to success with this whole business, especially looking at the M.A.P acronym, is marketing. You've got to be able to get clients, get engagements where they're paying you appropriately for the services based on the pricing model you've established that is it's an intelligent pricing strategy. You need to be offering quality services that you can obviously confidently provide and competently do. But in production, it all comes down to whether or not you're profitable is based on your efficiency. I'm not challenging the question of whether or not the numbers in the reports you produce are accurate, but I am going to challenge whether or not you took 20 hours to produce a financial report or 10 hours. It's all right there. That's your profit margin. Is it you are making $100 an hour or $50 an hour based on what you charge the client to do the work in 20 hours or 10 hours? It's just that simple. So let's work from this now. We've gone from onboarding to obviously doing the workflow. Let's now talk about client relations. With client relations, one of the things that I'd like to stress here is the fact that in client relations, if it's just the bookkeeping services you're providing where you're meeting with them on a regular basis, hopefully monthly, if not quarterly, to provide the financial reports, in doing so, you can simply just highlight and draw attention to things that they may need to notice. And in drawing that attention, give it to them and away you go. But a true accountant should literally sit down with the client and help draw some conclusions, identify some trends, give some analysis, draw attention to things that the business owner may know or may have a gut feeling for because they're living the business. But now the numbers are being, they're proving the point. They're drawing attention to it through the actual numbers themselves and complementing what their gut may be telling them. That's what we want to do here. How powerful it is as an accountant if you're able to come in and point out something in the numbers that they already knew or guessed, and now you're bringing that to them independently on your own. Isn't that a testament to how well you're taking care of them and how attentive you are to the numbers and the relationships, how well you know their business because you've bothered to become this familiar with what those numbers are and what they represent? This is powerful. At a client relation level, what I would definitely want to stress here is at an accounting level, we want to be tracking all the numbers and reporting on those based on the financial statements. But what other numbers should you be aware of or reporting on that are also related to the business, that are outside of the accounting? Key performance indicators that need to be tracked. As key performance indicators, one of the things that I always identify with our clients is what are the 5 metrics that they need to be looking at on a monthly basis. And honestly, the 5 metrics may or may not include accounting numbers. It may not include top-line revenue or gross profit or net income. It may not include a ratio of, let's say, a profit margin. It may simply be a sales number. How many invoices or sales occurred last month? What was the goal? What did we get? These key performance numbers, or KPIs, are trackable numbers and need to be actually used by the business owner. And if there's a number that is outside of accounting that you should be familiar with and perhaps reporting on, you need to be tracking that and doing so for and with the client. Regarding these key performance indicators, one of the things that I would stress is that you also have not solely the 5 or so key performance indicators, but also for each key performance indicator, at least 1, 2, or no more than 3 supporting key metrics. The supporting key metrics are simply to say that if and when the key number is either excelled upon or lacking, it's missed, you can go to these supportive numbers and identify why, what happened, what took place. For example, if the sales number is down, how many sales engagements or meetings or proposals were submitted? Well, obviously, if we didn't submit enough, we're not going to close enough. Maybe our closing percentage is down. We submitted 10 proposals. We usually get 4. This time we got 2. So we submitted enough, but our closing ratio is down. These numbers are telling the story behind the key performance indicators. These will help you in 2 ways. One, it'll allow you to become much more engaged and involved with your client so that you have at least a better understanding of the business model. But 2, it's going to allow you to ask better questions. And it's through these better questions that you're going to become a more integral part of that business owner's success, because now they see that the numbers you're bringing to them are relevant to the business decisions that they're making. This all leads us to the next level of services that you can be offering, that if you chose to, going in the M.A.P philosophy, going back to the accounting area, the services you're providing, when you're looking at offering quality production, and you're producing wonderful reports, financial reports, it does lend you to move into more of a consultative relationship with your clients, thus adding to the accounting services you provide, coaching services, a value-added service, an additional revenue stream of things that you're providing that allow you to, in turn, now become a more trusted strategic advisor for the client. So in the production realm, what we're talking about here then is, what are you doing to retain the client? What are you doing to improve the lifetime value of the client? What are you doing to retain the client in the sense that they see you as a key advisor in their business? These things, I think, are key to increasing revenue streams as to the revenue you're generating per client, but more importantly, the client retention that I just mentioned. These 3 elements of onboarding, having a very clear and concise way of processing new clients, of basically doing the work, having the work done efficiently, and then the client relations are the 3 elements of the production that you need to be looking at. Now, as it comes to the efficiency, the workflow, let me add that with regards to this, as you grow your business, you do look at training your staff so that everybody has the same background or foundation upon which they're doing the work for the clients. For this reason, I want to go to our sponsor again. With our sponsor, Universal Accounting Center, mention that we have a variety of programs that are designed to actually train and certify your staff to give them the competence to do the work in a very effective and efficient way. Oftentimes, people become what are referred to as professional bookkeepers, receiving the PB designation, QuickBooks specialists with the QS designation, professional tax preparers with the PTP designation. All of these enable you to actually have on staff certified individuals helping you on the marketing side, distinguish your firm as being a unique firm where all of your staff are actually certified professionals. It allows you in your own peace of mind to know you have quality trained individuals that are offering quality services. It helps with loyalty of the employees to you because you're actually getting them trained in training. You're investing in them, and they see that and appreciate it. And with regards to them, there's this common training that allows them to basically provide a unique, uniform service to all of your clients. All of your services or clients are being taken care of the same way. So with Universal Accounting Center, as a sponsor of our podcast today, just understand that there are a number of trainings and programs designed to help you individually or with your staff offer quality services with competence, realizing that there is a tried and proven method to providing quality accounting services when done correctly. Now, one of the things that I want to do is basically point out that with all of these things related to production, you need to understand that this is where the profit is made in the company. Profit isn't made necessarily on the revenue you're producing from the marketing and selling, getting that engagement. The profit comes then when you go back and with competency do the work. So I need to stress that as excited as you are about doing the work, it's the efficiency in which you do it that determines whether or not you're successful. So with regards to M.A.P, I want to just do a quick recap. But before I do that, I just want to again acknowledge our sponsor, Universal Accounting Center. I encourage you to contact Universal to find out what it is you can do to offer quality services as a certified professional, receiving the coaching and support that you need to be in business for yourself, but not by yourself. At Universal Accounting Center, we pride ourselves in providing quality accounting services, such as to allow you to get the training certifications that you need to become the premier accounting firm in your area. As such, what I'd like to do is just stress then as a quick recap some of the things that we've done. In previous episodes, we've identified what M.A.P is and really the genesis of where M.A.P came from as an acronym. That M.A.P represents marketing and accounting production. It's basically all the facets that exist in every business. Every business needs those three areas to work well, to be profitable. And in previous episodes, we've talked about the marketing component, the accounting component, and in this one, we've discussed production. Here as a recap, we're just basically pointing out that with production, there's three areas. Onboarding, that you need to have an efficient process that's both internally specific so that you're actually meeting your internal needs. It's customer sensitive so that you're looking at the experience they're having through that onboarding. You're looking at the workflow, how you're doing the work to be efficient, which ultimately results in the profits that you're earning. And lastly, you're looking at then the client relation, what you're doing to ensure that the client is using the information that they're getting from you, that they're seeing value in what they're paying you for. And ultimately, it's determining whether or not you retain the clients, that they're going to continue to pay you month after month. But more importantly, it allows you to then be positioned as a trusted strategic advisor to then later on offer even additional services, perhaps moving into even a consultative or coaching role. With that in mind, just understand this. We invite you to actually become the premier accounting firm in your area. That's the purpose of this podcast. That's what we're here committed to do at Universal Accounting Center. I trust that you've got some excellent notes in front of you, some very important things to do. Reach out to us here at Universal Accounting Center. Contact us at 801-265-3777. Visit us online at universalaccountingschool.com, or more importantly, listen to our other episodes and definitely subscribe to this podcast. Why? Because if it's about accounting, it's universal. Why? Because here we're basically allowing you to be in business for yourself, but not by yourself, because accounting success is universal. Do take care, have a great day, and thank you very much for your time.